Hello and welcome. You're tuned into this special on Business Today TV. I'm Sakshi Batra. Well, the festive season is upon us and there is cheer in the air as Indians are getting ready to celebrate Dhanteras and Diwali after nearly 3 years of the pandemic and the lockdowns. Now, how is the festive demand looking, especially when you talk about the precious yellow metal, gold this time? Are people going and buying more gold? Keeping in mind that the prices are down at 6-month lows. Now, to discuss all this and much more, I'm joined by Mr. PR Somasundaram, Regional CEO, India World Gold Council. Welcome to the show, sir. Season's greetings to you. And welcome to Business Today TV. Great to have you with us.
Thank you. And I wish you and the viewers the same. A lovely Diwali ahead of us.
Absolutely, sir. Thank you so much for your wishes. Well, just to talk about the festive demand, we saw massive demand for gold last year in the festive quarter, the October to December quarter. What can we expect this time around? Are people going to go out there? Is gold going to see some record sales?
Yeah, well, this is always a peak season for gold buying because you have Dhanteras, Diwali, and then lots of wedding dates during this quarter. So traditionally, this is one of the best quarters for gold, always. Other than those 2 years when we had the lockdown, I mean, particularly 1 year, 2020. In fact, 2021, I would say, was one of the best quarters we ever saw in 25 years of our data series. The reason was not hard to find. We had a lockdown, so people couldn't go out and buy. We had lots of savings because there were no other spends. And in fact, we heard it across the country. Most jewelers said, because the weddings were muted affairs, they said people spent more on gold last year. So we saw a record 343 tons last year, which is in that sense equivalent to 150,000 crore of buying. This year again, it's been good monsoon and there is festive spirit all over. People are going to be buying gold. Is that going to be as high as last year is the question. There are obviously some views around it because while the gold prices internationally have come down significantly, we haven't seen much of it in India because still our rupee has depreciated. So that has compensated for the drop in the global price, yet it is soft. So you could see a big surge in demand. Will it be as high as last year? There are opinions around it.
Okay, but what are your expectations on the gold sales in India on Dhanteras when, the maximum buying of gold perhaps happens in India?
It is always very difficult to estimate on a particular day. There are various figures. We do not have a figure of our own. We do a quarterly research on the data, but we do not have as Dhanteras. But figures range from 30 tons to 50 tons in a day on Dhanteras. So it is obviously one of the biggest buying occasions, and I would probably think it is one of the biggest buying occasions in the world as well, in terms of gold.
Yes. Like you pointed out, the gold prices have been subdued through this year. They are at the 6-month lows. Has that aided the demand so far in this year for gold purchase in India? And could it be reason enough for more Indians to go out there and buy more gold this festive season?
See, what we saw in the first half, we look at the calendar year, there was a 7% jump over last year. So first half, we ended with our estimate of 307 tons of gold. Last year, we bought 800 tons of gold.
Yeah.
Right? Last year, full year. Now, first half this year was 300 tons, which is 7% more than last year. But then last year was not exactly a good year. Don't forget, it was quarter 2, 2021, one of the quarters we would always like to forget for many reasons. So against that, it is only a 7% growth for various reasons, because inflation and rural economy is still trying to come back, etc. We have seen things have improved a lot over that with good monsoons, etc. Third quarter is always a subdued quarter, although the end of it is seasons like puja and other stuff coming up. We may see a jump, but I'm not very sure we will see the kind of spurt we saw last year, because as I said, last year we had a lot of subdued demand that came out, the new demand, and also people had lots of savings. Now people have started spending more on other stuff as well. They've started holidaying more. Cars have increased. So to that extent, the wallet share towards gold may also be affected at the top end. And at the bottom end, you're seeing stiff inflation. So how these are going to play out in terms of the aggregate has to be seen. That is why I said it will definitely be a very good quarter, but it will be as good as last year is something we need to wait and watch. We are not very positive. It will still be a very good quarter, but it may not be as high as last year.
Okay. Also, just like how you pointed out, let me take a cue from what you just said. There is inflation and there's also the weaker rupee at this point in time. What could be the impact of these two factors on the demand for gold and the festive demand for gold?
Well, actually, if you see, people look at the Indian price, all right? When rupee was far stronger against US dollar, rupee is still stronger against many currencies, but when it was stronger against US dollar, we still saw a price of 55,000 in INR last year, right? But now with a weaker rupee, we are seeing 49,000, 50,000. So in a sense, it has not been seen by the consumer as the depreciated rupee has not made gold go up to 60,000. That is because the international price has come down from 1850 to 1650. All right. So we haven't seen that entire benefit of that drop coming through because of rupee depreciation. So in a sense, therefore, it has been neutralized. We haven't seen much impact as such. Now, if somebody were to really read all the news and said, no, gold price should be 40,000 and it is not 40,000 because rupee depreciated. Now, that kind of analysis doesn't come in the consumer mind. They just look at price. There was 55,000. Now it is 49,000. Good price to buy. That's the way it appears as of now.
Right. There's also one point that I wanted to understand from you. We've always seen traditionally gold as a safe haven and as a hedge against inflation. But this year so far, now we've seen inflation. We've also seen uncertainty. There's geopolitical crisis that we have seen. There's market volatility that we have seen. But despite all of these factors, we've actually not seen gold stand up as a hedge against all of these factors. What could have been the reason for this?
Yeah, it is not right to say based on a short-term trend. Let's put it like this. If you look at 2019, start of 2019, okay, that was the normal year we had before COVID in 2020. What was the price of gold? 32,000, 30,000. What has happened to price during COVID and now? 50,000. Now, what's the jump? All right. So if you really look at things like that, gold actually has a step change over years. That is why it is a multi-generational asset. What was gold 20 years ago and what is it today? So if you really compare the returns of gold 10 years, 15 years, 5 years, etc., it always performs. It is comparable to other asset classes. That is why we always say it's a good diversifier, but you can't look at it like a coupon-bearing asset. Last quarter, what happened? What was the yield on this? It is very difficult. Currently, what is happening is gold prices are reacting more to the US dollar strength rather than to anything else because people are in the rate increases have been very swift and therefore funds are moving away from gold to other asset classes. Now, will this pan out in 2023? Will the inflation be controlled? These are all questions that we will all be interested to know. If inflation still doesn't come down and the rate increases, there is only a certain amount up to which you can increase rates, then gold could react actually much, much stronger. Today, what is happening? International prices have reacted to US dollar strength. They have softened. Therefore, you see that gold is not probably moving sharply upward.
Right. So what, according to your opinion, gold prices could, trend towards going forward from here? A large ballpark figure, if you could share over a long-term period, next 3-5 years, where could we see gold prices, going up to?
Well, actually, we don't forecast prices at all. We say all we will say is gold is actually a very good portfolio diversifier. In fact, it is times like this when you have too many questions. Why did this asset class not perform like this? Why did gold not react like this? Why is dollar strengthening despite high inflation? There are many, many questions that are still being debated by the economists all over the world. And I don't think anyone has the right answer yet. Now, it is only in these times you got to stick to the discipline of saying there is a certain amount of portfolio I will always hold in gold. Because gold is a long-term asset. When nothing else works, you turn to gold. Currently, dollar strength is actually overwhelming other factors. But will it continue to hold sway is a question. Therefore, we are very bullish on the long term. That's all I can say as a verbal counsel. We always say gold will always be a protective cover as a portfolio diversifier. Now, what the price will be 1 year from now? No, I will only give one price point. 55,000 is what we saw even when rupee was far stronger. Today, with rupee having depreciated a little more than what we expected, it is still at 49,000. Therefore, there is a massive headroom even for investors as we see it.
Okay. So if I have to understand from you, coming back to the festive demand, what kind of trends can we see this festive season back home? Are people going to go towards jewelry, the traditional assets, or coins and bars? What are people buying in India?
See, generally on the Dhanteras day, there's a lot of coin purchases. That is what we see. But overall, if you see the Indian demand, it is 80% jewelry. Okay. It is always 80% jewelry. And of late, we have seen new trends like ETFs, which have around 40 tons of ETFs is there in India. It's not very big. And we also have digital modes of buying which have come in, where you can buy for small lots. You don't have to even buy for 1 gram. There are lots of fintech initiatives which have come in, which keep the gold separately and all that stuff. They are not regulated products, but they are seeking to get regulated. It's all out in the air, but they seem to have these kind of buying options as well, which have caught the fancy of the millennials. So you have digital gold, you have ETFs, you have sovereign gold bond. I'm sure that there will be an issue, which is the paper gold, but it is again a strong gold investment, and jewelry and bars and coins. So if you really look at all this, which give you a foreign currency exposure in that sense, because gold prices in foreign currency, I think predominantly we will see jewelry holding sway. And also during this season, post Diwali, it's a wedding season. So you will generally find people go for very heavy jewelry in India. Although, as I said, what we hear from the market is that now there is also a trend for lightweight jewelry.
Yes.
Millennials have different tastes. So we are seeing a lot of change in the market at the moment. But jewelry holds the market share, the line share of the overall demand.
Right. And, is there a difference between the demand from the urban areas versus the rural areas? If you could pick out any trends for us to understand a little better.
See, rural areas have been the predominant driver of gold demand because there was less banking and financial inclusion. Many of those factors don't hold good now because of digital banking and because of better transportation, better roads and things like that. So when you say digital rural demand, even they actually come to the nearest center, the town, to buy these days because the buying experience of gold has transformed in the last 10 years with organized players.
Yes.
The big ones have really transformed the buying experience. It's no longer about just going and collecting whatever gold you can lay your hand on. It's about having a lovely experience, sitting in a shop, choosing it, etc. Many of the players have now even come out with cognitive technologies and things like that, where even if there is a particular design not available in the store, you could see it yourself wearing it on the screen. So lots of these experiences have come in. So rural demand and urban demand, generally rural goes for heavy jewelry. That's the trend. But if you really look at it in India, it is very difficult now to say anything as rural and urban, particularly when it comes to gold, because of many changes that have happened in our country itself. Earlier, rural means it was inaccessible. You had to go to the nearest thing. Now it's not the case. You can find the best thing available on your digital and then go and pick that piece up or have it delivered home. So there are many changes happening. So it's a little difficult to say, although general understanding is they go for higher, heavier jewelry and it is more modern in the urban areas, etc. But I would not probably say that these are hard lines anymore.
Okay. And do you think, steps that have been taken in the recent past on the hallmarking of gold jewelry, has that made a positive impact right there in the consumer's sentiments and, the confidence of buying gold, which they now get, on an authentic way, much easily in every jewelry store vis-a-vis earlier?
Yes, I hear that it has actually made a difference. We have actually been very supportive of mandatory hallmarking. We have worked with the trade for a long time. So we're very happy to see that. Absolutely brings a lot of trust. But I should still say this is still early days because it's just 1 year, and even that there was a transition time given, etc. But clearly, hallmarking gives a level playing field to people. So you can go to any store today and you trust the hallmarking there. You can just now buy from that store as if you are buying from a big store. So actually, it benefits the small jewelers. There's no doubt about it, and it is improving trust in the industry. There is also absolutely no questions about that. Now, obviously, we have to now see the next level. There is the things like unique identification number and things like that, which the consumers will come to know, which is globally not there in any other country. We have been a little advanced about it. Once these things become more, the awareness improves, you will find that the trust in the Indian jewelry industry goes much higher than the current levels, and that's good for the industry.
Okay, understood that as well. Help me with some of the factors that could impact gold prices going forward from here for all the investors to understand, when they're going for this purchase in whichever form they do. Jewelry, you talked about gold and coins and bars, and also the newer forms, ETFs, digital gold, mutual funds, and the sovereign gold bonds as well. Anyone who goes at this point in time to buy gold as an investment for a long-term perspective, which are the factors that they must keep in mind that will drive the prices going forward?
Well, clearly, as I said, gold as a part of the portfolio is what you should look at. And out of that, let's look at jewelry. Jewelry is an ornamentation. I mean, it's essentially meant to be worn and enjoyed, physically. So unless you really need jewelry, you should actually keep it in other forms till the such time, because you can always convert a bar or a coin into a jewelry piece. It is very easy to pass on a coin or a bar and say, give me jewelry equivalent to that and pay only the labor charge. So I would always say that if the investment motive is a wedding where you need certain jewelry, no question, it is obviously jewelry, but you pay higher labor charge, and because handcrafting and all that stuff is expensive. But when it comes to holding gold in other forms, holding gold in other forms, I would say, again, bars and coins is one if you need physical. But today, the options have increased. For instance, sovereign gold bond gives you 2.5% return on your basic investment. And the maturity is tax-free. Whereas you sell gold, it is taxable. All right. So sovereign gold bond is a great investment because it comes with a government backing. Bars and coins always are good, but you need to be very clear that you buy it for a future or whatever it is. And digital gold and ETFs. For the people who really want more liquidity, ETFs could play a very, very strong role. Digital gold is again for people who want to accumulate small amounts. They can't even afford a gram or whatever it is. You can just buy for 100 rupees, 200 rupees, keep accumulating, but you have to choose the right players. So all these forms have now actually expanded the choices. But overall, what we need to do is to show a discipline about portfolio diversification. At the end of the day, gold is negatively correlated to equities and many asset classes. And particularly when the markets don't do well, this negative correlation becomes more demonstrated. So it is important, therefore, gold is treated as an investment, even though it is in jewelry form, and people look at the amount of gold they hold. And also the gold monetization scheme, which has probably, picked up a little bit, but not as much as one would like to. I think people with surplus gold should look at that as well with some of the banks, because they give you good interest.
Okay. And what are the factors that could impact both gold demand and the prices going forward from here?
Yeah, clearly in the short run, demand doesn't determine the price. Okay, price determines demand, because price is determined more by US interest rates and US dollar. Let's be very clear. That's a predominant thing. You could still have local discounts and premiums, but international prices are fixed with an overwhelming influence of dollar at strength and dollar rates. At the moment, as we see, the rate hikes in the US actually make it very expensive to hold gold. Because as every rate hike goes up, when it was 0%, there was no cost of holding gold. When it is 2.5%, you waste that money, you lose that money. So that will have a strong influence. There is no doubt about it. But there are other factors like economic growth. Okay, because we have seen a 1% increase in income leads to a 1% increase in demand. So economic growth is another thing, and global uncertainty is another thing. Now, how the war pans out, how inflation pans out, this could have a impact as well as we go into 2023.
Okay, understood that. So lastly, help me understand. You pointed out that, last year Indians consumed about 800 tons of gold. Could we see a higher number this time around, considering that the love for gold has not diminished despite, all these uncertainties that we just discussed?
It is, we have estimated about 800 to 850 at the beginning of this year. And having seen up to the first half, which is, as I said, 300 tons, we believe it could be slightly lower than last year in terms of tonnage, but in terms of the amount of money invested towards gold, it might be higher. But again, as we always say, it is very difficult to give an estimate, particularly when the last quarter becomes the biggest quarter. Anything could happen. If the price softens a lot more in November, the wedding purchases can just go through the roof. All right. So at the moment, looking at the factors, we believe it will be slightly softer than last year. Because the last quarter was actually helped by demand, which was suppressed in the previous quarters because of lockdown. It may not have that benefit this year. And second, people have started spending money on other stuff. Weddings have become larger affairs, etc. So to that extent, the wallet share will shrink. But it is to be seen how it is. There are differing views. Many people have reported good sales. The puja sales was good. But we still believe that it is very difficult for 2 years in a row to have a very, very high fourth quarter. So on that basis, it might be slightly softer, but nothing very significantly below last year. So it will be around what we have seen last year.
Okay, understood that. Well, on that note, thank you so much, sir, for being with us and sharing all these insights on the outlook on the festive demand for gold. And here's wishing you once again season's greetings and a very, very happy Diwali and a prosperous new year.
Thank you very much.
If you like the video, do like, comment, share and subscribe.